Let's bring in Rohit Kulkarni. He's Managing Director and the Head of Research at SharesPost, joining us live from San Francisco. Rohit, welcome into the conversation. Why is now the right time for another mega IPO in Hong Kong? Do you think management have actually looked at the performance of these other large IPOs throughout the course of this year, which are now all underwater, and perhaps had some pause for thought?
Hey, Dan and Emily, thanks for having me. And yes, as in now is as good a time as any. As in, despite the bear market, we have had three massive China unicorns go public this year. When has that happened in the past decade or more? As in, we have had Pinduoduo, we have had Meituan and Xiaomi. There has been more than $100 billion in value created on the public markets through China unicorns. So there is going to be volatility. There's going to be a lot of swings back and forth for these companies that are fairly young and they're very early in the life cycle. So there is going to be a story that they want to prove out. But given the appetite among growth investors, I think there is now as good a time as any.
Rohit, stay right there. We'll continue the conversation in a moment. Let's get back out to Rohit Kulkarni, who's in San Francisco, talking us through this mega IPO that's set to take place in Hong Kong today. Rohit, just your thoughts on how you actually expect the initial trades to flow through. What type of performance are we going to see from these new equities?
I'll talk about Meituan. From what I see in the numbers, as in peeling back the onion, I'm not very surprised that this company is trading at this fairly discounted valuation, if you will. This company would probably do revenues exceeding $8 billion. So they're trading at 8 to 9 times revenues, and that's mostly around profitability outlook. Where does the company stop burning cash? That is the biggest question for investors. But near term, I see buying opportunity for investors with a pretty long-term time horizon. If you have a time horizon of 12 to 24 months, I would be a buyer of Meituan at these levels.
Rohit, you're talking about them being cash burning. The company has been in loss for the last 3 years. They make 62% of their revenues from food delivery, and all of that is subsidized. It's a highly hyper-competitive market over in China. Where do you see the losses? I should say, when do you expect them to make profit, and how do they gain customer loyalty? Because Alibaba is one of their fiercest competitors.
Agreed. There is that biggest question mark. When does this company turn profitable, or are there pockets of profitability that they are going to peel back by pulling back some expenses, be it sales and marketing or what have you? What I feel comfortable about is that this company has proven a pretty good mousetrap for more than 300 million active users. And with that, they are able to layer on more revenue streams, not just food delivery, but beyond that, to travel, to hotels. Maybe they go into airlines. I know all these areas are fiercely competitive, but if this company can get a deeper and deeper share of wallet, and if they can show that they are able to get a deeper share of wallet from consumers, then the pathway to profitability will follow. But investors shouldn't think about profitability at least for the next 12 to 24 months. That's what I feel this company would continue to burn cash but slowly reduce their cash burn by end of next year.
Now, this is obviously a consumer play. The company expectation is a long runway for growth. 340 million active users amongst a population of 1.3 billion. Where do you expect the company, how quickly do you expect them to grow?
This company has doubled revenues on the back of almost increasing their consumer base by 60-70%. I don't see any particular reason this company would slow down that growth, given the cash injection that they have had through this IPO. Now is the time to be aggressive. Scale matters, particularly more so, as you just mentioned, in light of Alibaba. They have Tencent behind them to help them curtail their sales and marketing spend, but that is just one big 500-pound gorilla going up against another.
Now, with the Meituan Dianping, this is a new batch of tech titans coming to market, and a new acronym that we have to get used to. This is TMD versus the older BAT. What other tech titans do you think we should be keeping an eye out on?
I would add one more T in there, Tencent Music. I think That's something as a spin-off, although it is running under the radar in Q4. I would expect them to go public. That would be another multi kind of tens of billions dollars worth value unlocking that Tencent would continue to do from its portfolio of companies. So yeah, you have T on both ends, maybe TMDT or something like that.
Rohit, that's where we'll leave the conversation. Thanks so much for joining Emily and I this morning. We appreciate it. That's Rohit Kulkarni from SharesPost.